The rupee concerns loom large, and the rupee today slumped way below the psychological level of 60 to the dollar, touching the historic lows of almost 60 rupees 72 paise to the dollar. Just minutes ago, it has seen another bout of fall today, and the Indian rupee has been the worst performing Asian currency in the last 1 month, and this fall today comes, remember, ahead of the current account deficit numbers to be announced on Friday. Let's straight away get Manisha Gupta on the show to get a sense of where rupee is headed. Manisha, good to have you on the show. Now, what's led to this crash, and was there any effort by the RBI to contain the fall?
Well, lots of factors which have been putting pressure onto the Indian rupee. Just to start with numbers, we have seen an all-time low of the Indian rupee at 60.76 in the intraday market there. It has been coming in because of the pressure points, because of the reason that, one, you have the CAD numbers coming in on Friday for the March quarter, and markets are expecting a weak number to come in, and that in turn has been putting the pressure onto the Indian rupee. You also have seen fresh dollar demands coming in from corporates or importers, and the month-end demand is something that has already been weighing onto the prices. Apart from that, you have seen strong US data in the last couple of sessions, like the durable consumer numbers and consumer confidence numbers as well. So that has led to strengthening of dollar, and that also strengthens the Fed announcement of possibility of tapering of QE, and that has been weighing onto the Asian currencies, more so in the Indian rupee case. Apart from that, you did see RBI intervention up to 59.98 kind of levels, but once the rupee went past 60, you did not see RBI come into the markets. There have been various sources telling us that RBI has not intervened since 60, and there have been ministry, or rather the officials, talking that now they will only watch out for the demand supply numbers coming in from the market, so they will let the market be and see where the rupee actually sees some consolidation coming in, and that really led to some aggressive buying of the US dollar and selling of the Indian rupee there. But let's also listen into market experts on what they expect in case of the Indian rupee.
We continue to see further weakness in the rupee moving forward. It's not really the rupee which is doing this at the moment. It's more the strength that we're seeing in the DXY and in the dollar index as a whole. In the shorter term, throwing more money at it, intervening in the rupee markets may help. It may start to slow the rate of depreciation of the rupee, but in the longer term, it's all about the rules for foreign direct investment, FDI, into the country. The longer term issues need to be solved before we can actually start seeing a strengthening rupee.
If the global market continues to blow, the rupee will continue to weaken. Whatever the government does, right, it is not going to materially avert where the rupee is going. However, if they do some major structural moves, when the wind dies down, the rupee will probably recover a lot of this excess loss.